Hi, I'm Tracy Falbe, real estate agent with Berkshire Hathaway Home Services, Michigan Real Estate, and I'm based in Battle Creek. The subject of today's video is getting you ready to buy a house in 2026. As you know, you'll have some financial planning to do, and I'm going to go through step by step the major issues that you need to plan for, and we're going to dig into closing costs because those are often a unpleasant surprise to first-time home buyers, but you can plan for it, budget for it, and possibly even negotiate to where the seller credits you some of the sale price to cover some of those closing costs. So let's get started on how to buy a house in 2026. Okay, I have brought up this document that contains the major issues you will need to contend with as you buy a house. I realize it's not very exciting to look at, but it will keep me on track. And the text of this document I will include in the description for your reference. So, first topic, when you're going to go house shopping, you need to have saved for a down payment. Except for there's a few loan products through the VA and USDA where you might qualify for a zero down loan. Most people will be using other loan products and they will need a down payment. So you're going to save for your down payment. Whether that's 5, 10, 15, 20% of the purchase price of the home is up to you and what you qualify for when you work that out with a mortgage lender. But you are going to need a down payment. Ideally, you will save 20% of the purchase price of the home because then you won't have to worry about paying for any mortgage insurance through your lender, and you'll have some pretty good instant equity. However, not everybody has time to do that because it can take a long time to save that money, and there are other loan products, especially FHA, but conventional loans as well, where you can put less money down. And that'll get you in a position where you can buy a home quicker and start making payments and building your equity instead of just renting and trying to save for a huge down payment. And that is something you would work out with a lender, what you qualify for and what you can handle with your current savings. So that's to the next part here, is that to go shopping for a home, you will need a lender pre-approval letter from whichever mortgage company is going to lend you the money. And that can be your bank, your credit union. You can go through a mortgage broker who shops around your application to all kinds of different mortgage lenders to see who's can give you the best fit or the best product for your purposes. So that's something you'll have to work on before you hire a realtor like me and start shopping. Because if you don't have a pre-approval lender for your loan, there's no way you can make an effective offer because you can't. That letter you're going to put in with your offer so that the seller can see that you have made arrangements to actually pay for the house. So if you want to make an effective offer, you need to show that you can pay for the house. If you don't need a loan and you have money, fine. We'll just need a proof of funds to show with your offer. But in general, most people need that pre-approval letter from a lender to show that they can pay for the house. So when you're doing that, you'll want to make sure you've been working on getting your credit rating pretty good, clearing out debts, as many debts as possible, so your debt to income ratio looks good, because a loan officer is going to look at your income, your credit score, your assets, and your current debt to income ratio. So lenders can go into more detail on that, and different loan officers and companies have different ways they rate that to be able to approve a loan product for you. So that is something you will need to shop around for and make a decision on who is going to be your lender before you can go look at houses. You can go to open houses and stuff. That's fine if you just want to look around and see what's going on. But if you want to be in a position to make an offer, you need to have some kind of loan lined up or a bunch of money. Now, okay, most people know, hey, I need a down payment. I need to get a loan. Closing costs can blindside a first-time buyer because you've never done before. You've never heard of these costs. So closing costs, the simplest way to explain them are paying for the services that are needed to complete your real estate transaction. And so there are going to be a lot of costs. Let's look at the basic ones, loan origination fees. So your lender's going to charge money that pays them to do the underwriting work where they deeply examine your financial life. So there are often loan origination fees. Sometimes people pay what's called discount point fees, where you're paying to get a lower interest rate. Those can easily add up into the thousands of dollars. You don't have to do that, but it could be worth it. That's something you work out with the lender. But anyway, there will be fees to get a loan. Lender's title insurance. Once you get a loan and once you're going through a transaction to buy something, your lender will want a title insurance that protects the lender in case anything unpleasant raises its head about the ownership and possession of the property. So hopefully that'll never happen, but that's why you have insurance in case it does. That title insurance policy, the title company will investigate the property records and they will hopefully not find anything and it'll be clear and you just pay for the insurance and then nothing happens. But if something does come up that the title company missed or just could not detect because it was not part of the public record at the time, then there's an insurance policy to protect the lender. When you buy your house, the seller should be buying a owner's title policy that is your insurance that proves to you, hey, title is clear and we're able to sell it to you and there are no competing interests. Oh, right, settlement closing fees. That is when you pay the title company for the services because they're escrowing all the money involved in the transaction and on closing day they disperse it to whoever's supposed to get it and they do all the paperwork. So they have costs, they charge for those services. That's usually, it's going to be in the hundreds, maybe 300-ish, depending on how many things are going on, but usually the low hundreds. Broker commission, that is when you pay for your real estate agent services. So if you were to hire me, you would be paying Berkshire Hathaway Home Services Michigan Real Estate. That'll be a percentage of the sale price, so that usually adds up to a few thousand. I pay out my broker, I get a share of that commission, I cover all my expenses, and hopefully there's something left over for me. Now the appraisal, that will be a closing cost that your lender will ask you to pay for. It's a few $100s depending on the property. And that's where the lender they hire their appraiser. I don't get to pick it. You don't get to pick it. And they double check to make sure, okay, this home has enough market value to serve as collateral for the loan. You may want to get a land survey. It's fine if you do. In a lot of situations, maybe you don't feel like you have to, and that's all right. It's optional. It's a few $100s if you want it. That's great. You'll just know for sure what's going on with your property boundaries. That can get important at times, so it's optional. It's there. And another big chunk of your closing costs, easily into the thousands, is prepaid property tax and homeowners insurance. Because typically when you set up a home loan, your home payment's going to include, for the loan, the principal and interest, and it's going to be funding escrow accounts to cover your future property tax and homeowners insurance bills. So on day one, when you buy the house, those accounts need to be pre-funded to have some money in there, and your lender calculates what they think they'll need to have it to start, because you might have a tax bill due in a month or two after you buy the house. So there needs to be some money there. So that can be a couple thousand easily that they're pre-funding. County recording fee, that's usually in the tens of dollars, maybe 50-ish, maybe up to 100. So not much, but it is a charge and it will be there. So that's your overview of closing costs. You can think of it as 2 to 5% of the purchase amount or the loan amount. Either way, it's going to be a cost. It's going to be there. Now, potentially some of these you won't have to go out of pocket for if we are successful in negotiating a sale where the seller gives some concessions. And a seller concession is, okay, we're paying X amount of dollars, and at closing they agree to credit back part of what they're paying, what you are paying them, to cover some of these closing costs. So sometimes you can get some of that covered or all of it. It just depends on how it goes. Maybe the seller refuses and you don't work out a deal, or you work out the deal and you're like, okay, I have the money, I have my down payment, and I have a few grand to cover my closing costs, and you just pay it. So it's unpredictable without getting into an actual offer negotiation what exactly you'll be paying for, but you get to know what you're paying for before you say yes. So hopefully you can get the seller to credit back that cost and it's not out of pocket for you, but I always ask for that. Most buyer agents will ask for that, especially in this area, because it's not, unless the house is really fabulous or in a highly desirable spot, you probably won't have competing offers but you never know. There could be another one. So it depends. Another thing you're going to need to go out of pocket for are inspections. So plan on having about $500, maybe up to $1,000 on hand, because these are services you're going to pay at the time of service. It's not a closing cost, because you might pay for an inspection on a house, not like what you see, decide you don't want to continue the deal because you have an inspection period where you can back out if you want, but the inspector still needs to be paid. So probably about $500 you'll want to have around. It could go higher up to $1,000 if you end up needing to hire another specialist to look at something. For example, home inspector looks at stuff and is concerned about the foundation. So then you have to hire a foundation specialist to tell you what's going on with that if you want to continue, because maybe you can renegotiate the deal based on the information you get from inspectors, or you can back out. Or you can just move forward. It's up to you. But at any rate, it's going to be a cost, and that's out of pocket day of service. Other money you'll need on hand when you're making an offer is the earnest money deposit, and that is usually $1,000. It can be a little higher if we're on a higher price property. Sometimes you got to put some more on the table. You might think 1% of the purchase price. If you're in a competitive offer situation, sometimes people will do a higher deposit to show, yep, I'm financially strong, I'm very interested and serious about this property, so it can make your offer look stronger. But typically, it's going to be about $1,000, maybe a little more. And that is money you will need on hand within a day or two of having your offer accepted. Pretty much the next day, if I'm your buyer's agent, I'm going to be like, all right, we got to get our deposit on the table. This will, if you close the transaction, if everything works out and you end up buying it, this does go toward the purchase price. You can just think of it, it's a little part of your down payment, but you're going to need it liquid on hand. It can't be tied up in some stocks or some account that you need a few days to get it moved out of. It's like, no, we got to pay. If your offer is accepted, you got to get that deposit going right away. So just be aware to have that. So that is your overview of your closing costs and the financial steps you need to go through to buy a house in 2026. Excuse my phone honking there. So if you would like to talk about this in more detail, please reach out to me. I'm a real estate agent with Berkshire Hathaway Home Services, Michigan Real Estate. I'm in the Battle Creek office on Capitol Avenue. My name is Tracy Falbe. You can call or text me anytime, 269-967-6589. Thanks for watching, and leave a comment with your questions. I can answer those in a timely manner right here on the video. And look in the description. My contact information will be there as well, and the text of this document so you can refer to it as well. Thanks for watching.